Alright guys, so fair value gaps. Two rules: price moves away, leaving a small gap. And these gaps can be used to determine possible entries and targets. So I've marked out some fair value gaps right here with the blue boxes. And as you can see, price moves away and it leaves a gap between the next candle and the previous candle. So if we mark it out with a line, like I did right here, we can see that it leaves a gap. And often when price leaves a gap like this, it will want to rebalance itself. Now the way how I use them is I don't trade solely of fair value gaps. I want to use them in combination with either a bullish order block or a bearish order block. So what I want to see is if price is bearish, I want to be entering a short, and what I'll look for is if I see a fair value gap like this, I know price will want to rebalance itself up until at least this point to completely fill it in. So what I'll do is I set a limit entry for a short, and my stop goes above the bearish OB like we discussed in lesson 2. And my first area of interest to take profit is below this key swing low. So this is one way how I trade a fair value gap. Now the second way how we can use them is, remember the lesson 1 bullish order block, right? The rules: we want to be entering at a key support, this swing low. It needs to have a wide range body like this. And as you see it right here, we have a fair value gap. So we know even though price is reaching up, it will eventually want to rebalance itself up until this point. So price has a reason to go lower. And we got this OB. So what I'll do in a scenario like this is I want to be entering near the mean threshold of the order block. And my stop should go below the wick, targeting previous highs, this one, and the fair value gap right there. And as you can see, this wick just swept this high into the fair value gap. I would have liked it if it was a little bit deeper, but sometimes it just doesn't give you the optimal exit. So as soon as you saw this being swept on lower time frame, you could have exited your positions for a nice 4-hour trade. Another way how I use fair value gaps is in combination with a breaker, and I'll explain breakers in a next stage on the lessons, but just a quick glance. A breaker is the last up close candle at a swing high before we sweep a low, and then price, instead of getting rejected like a bearish order block, price just pushes through. So this becomes a breaker. So what I'll do is I look for confluence between the breaker, the high of the breaker, and the fair value gap, and I'll enter a long position. If my bias is still bullish, I will be entering a long position with my stop below the body of the breaker, targeting these highs right here and this previous high into the fair value gap. So this is a bullish scenario. Now for a bearish condition, as soon as we swept all of these highs and we got a violent break in structure, price left another fair value gap right here. And then I have one question for you. If you look to the left of this chart, what do you see in confluence with this fair value gap? It's this support and resistance flip, right? So we got range high, rejection, we pushed through, support, then it broke it cleanly again, leaving a fair value gap. So what we can do right here is we want to be entering a short. Oh shit. So we can enter a short right here, and our stop can go above this high because price already rated this high and this high into the fair value gap. So price has no reason to go up, to go back above here. And what do we target? Well, we target the lower fair value gap like this. So this is a short trade you can take. If you missed this trade, that's okay, because price left another fair value gap right here. And what do we have in combination with this fair value gap? we have this OB. And this is a great example actually, because remember how one of my rules is that it needs to have a wide range body, and I do not want to see a small ranged body. So whenever I see candles like this, I prefer to enter on this candle because it has a bigger body. And then my stop goes above this high right here. Target remains the same, the lower end of the fair value gap right here. And this is how I use the fair value gaps in combination with breakers, order blocks, right?